Hello, good morning, everyone, and welcome to this second executive briefing by MEED on the Iran conflict. My name is Edward James. I'm the head of content analysis at MEED and Global Data. And with me today, I have Colin Foreman, the MEED editor, and a special guest, Christopher Granville, Managing Director, Global Political Research at Global Data, TS Lombard, based in London, who will be giving his views on the macroeconomic and geopolitical situation. So as ever, we've got a very fluid, fast, emerging, changing situation right now with the conflict, and we'll be doing our best to go over our thoughts on what we see happening and to answer any questions that you have about the situation. You can see on the right-hand side, you have a comment box. And if you have any questions for us after the end of our short webinar, we will do our best to answer them. So please put in your question into the comments bar. Now, this is being streamed live on YouTube and will be available in a recorded manner on YouTube once the webinar has finished. So you'll be able to watch it again and share it with your friends and colleagues. Okay, so without further ado, let's kick off. So I thought it would be a good way to start just by giving a summary of events over the past 48 hours. As I mentioned, it's a very fluid, fast emerging situation. Things are being changing rapidly, events are often outrunning what previously people thought was the sort of situation. For example, just a few days ago, the view in the market was that Iran had announced it had apologized and would stop attacks on the GCC states. Okay, although just a few hours later, that proved to be untrue. So what we have today in the last 48 hours may, of course, change very rapidly. But what we've seen in terms of major developments, these are what we think are some of the most important things. So first of all, just yesterday, the Iran military command said that following an attack on an Iranian bank, that it would also start targeting banks and financial institutions in the region, so and also American businesses. So that's clearly an escalation by the Iranian authorities, similar to when they said they would start targeting desalination facilities. Now they've also said they were going to start targeting banking institutions and American businesses as well. Also overnight, the UN Security Council overwhelmingly voted to demand an immediate cessation of hostilities on GCC states. Now, this was one of the most clear-cut votes in UN Security Council history, of 135 votes approving the resolution. So there's overwhelming support globally for a halt on the attacks of the GCC states. What else has happened recently? We've seen the IEA announce that it would release 400 million barrels of its emergency reserves on the 35-member authority, and that is aimed really at reducing or lowering the upward pressure on oil prices. But despite that announcement, this morning, oil is back over $100 a barrel. So it doesn't appear as if the market has taken too well to this, taken too well to the announcement with the oil prices going back up. On the sea, we've seen 3 container ships attacked over the last 24 hours on the Straits of Hormuz. And even more recently, 2 oil tankers have been hit at Qasr port in Iraq, while at the same time, the US has said it's destroyed 16 Iranian mine-laying vessels. What else has happened? We've seen yesterday a drone explode close to Dubai Terminal 2, which highlights again that Iran is still attempting to disrupt aviation. And then we also saw another escalation by Iran with a drone attack on Salalah port storage tanks, which again is an escalation because Oman has been largely escaped the sort of brunt of the attacks by Iran. But by attacking Salalah, Iran has showed that even its most friendly neighbors are still going to be the sort of target of attacks. Now, that said, some good news in terms of the decline in the total number of missile and drone launches. You can see on the right-hand graph that the total number of daily attacks has reduced over time quite substantially as, well, we believe Iran's ability to launch missiles and drones is reduced by US and Israeli attacks on their missile and drone launching infrastructure. So there's been a large drop-off. That said, when we're looking at the total number of attacks, UAE remains bearing the brunt of most of the attacks, with more than all of the other countries being hit put together. So UAE is seen very much as getting the best possible outcome from Iran in terms of the psychological and economic impact. So you can clearly see that the UAE is the prime target among the GCC states so far, but although all the other states have also been hit quite badly as well. Okay, now I'm going to pass over to my colleague Colin to give his views on some of the major developments. And again, just a reminder, if you do have any questions for us at the end of this session, please put them into the comments box on YouTube, and we'll be doing our best to answer them once we've finished our slides. Colin, over to you.
Thank you, Ed, and good morning, everyone. Just a few stories just to highlight and just to cover. As Ed already mentioned, there's been some attacks on shipping in Iraqi waters. I think this is quite significant, and combine that with the drone attacks that we saw in Oman, that means that it's not really just a Strait of Hormuz issue, it's a shipping oil and energy problem across the region, which is obviously impacting oil prices, which Ed just discussed there. I think if we then look at the broader region for an impact, we've talked a lot about what's happening in the Gulf and the direct attacks, but it's having a region-wide and an international impact. So if we look there, there's a story there on Egypt, how gas prices have increased by 30%. I think diesel as well is up by something like 17%. So we're seeing economic stress being felt around the region, even if it's not directly impacted by the conflict from a security point of view. Can we go to the next slide, Ed? In terms of project news, it's quite interesting at the moment. There's a lot of talk about what the impact's going to be on the projects market across all sectors. And there's an awful lot of speculation as to what's going to happen. When we were discussing this a few days ago, we were talking about some of the impacts that could be short term in terms of disruption due to work stopping on sites due to security issues, and then the longer term impacts such as supply chain availability and cost escalation. I think one story just to highlight, Win announced yesterday that they're resuming work on site. There was after a temporary pause. I think it's quite important just to note that there are sites that are stopping work at the moment. If you think back to previous economic crashes, we've seen work stop on sites, and that's been projects being referred to as being put on hold. I think in this situation at the moment, we're not seeing that. We're seeing, as that statement said, work pausing, and I think it's work stopping for a short period of time just to assess the security situation, or there may be some specific concern, and once those things have been addressed, work's restarting. So I don't see a market at the moment where we're being inundated with projects being put on hold. If I think back to late 2008 and early 2009, there was a spate of projects being put on hold on an almost daily basis as the Dubai property market slowed down. I don't see that being the same situation, but there are sites where work is pausing temporarily. So interesting story there, but not the major concern that you would have for the long term. And then also on the project side, there's critical infrastructure projects still moving ahead. This is an oil and gas story about Habshan 7, but there's also progress being made on other critical infrastructure projects, not just in the energy space, but also on the transportation and logistics side of things to beef up and support some of those supply chain concerns that people have at the moment. We move to the next slide. And then, particularly for people in Dubai, but also in other parts of the region, I think one of the big questions for the projects market is going to be how the real estate market performs going forward. At the moment, I'm looking at the daily transaction values every day. At the moment, they're holding up compared to levels that we've recorded this year. If you look at that chart, that's from the beginning of February. And after a dip at the beginning of last week, so the first week following the initial strikes on the 28th of February, so the first week of March, there was a bit of a dip, but this week the numbers have returned actually to a higher level than they were before. So transactions are certainly still being done. It's a bit early to say what's happening on pricing. There are some websites out there that are tracking things like panic selling, but there's no real firm data on what's happening overall in the market. But certainly from a transaction volume point of view, there's still movement in the market. And just to highlight a story that my colleague Yasser has written on a lot of the questions that face the real estate market over the coming year, and I think for Dubai in general, I'm sure there'll be questions on this. I think two of the key things that will need to be answered or will be answered as the year progresses is what happens with tourism and travel and what happens with the real estate market. And that's my slides. Thank you, Ed.
Thank you, Colin. And I think it's interesting, isn't it, that in many sectors, I mean, well, in the projects market, it's almost, not completely, of course, but almost life as business as usual, with new tenders being issued, contracts being awarded. And as you can just see here, in real estate, people are still maybe counterintuitively buying and selling property. So it's interesting, isn't it? I think in that respect.
On the project space, yes, that is the case. I think the thing that we're already seeing an immediate impact is in the tourism sector. So if you speak to people in the hotel industry, occupancy levels are at very, very low levels. Obviously, a lot of tourists have left Dubai over the last week, and they're sitting at very low numbers. So we're seeing on the operational side a real impact. F&B's also having had a negative impact, particularly in areas where their customers would be tourists. So operationally, from tourism, yes, there is an issue. On the project side at the moment, it still seems to be progressing as planned, and a lot of that's to do with the fact that funding's secured and there's no major disruption in terms of work that's going ahead. Contractually, it's generally regarded as a disruption rather than a sort of force majeure event where it would be impossible to deliver the project.
Yeah, absolutely, completely agree. And if you do have any questions for Colin, then please put them into the live chat box, and we'll answer them in a bit. Now, of course, what we just discussed and everything really around the conflict is, I guess, the key question is, when will it end? And to give his perspective on that, or some of the perspectives and views on that, we are delighted to have with us Christopher Granville from TS Lombard, MEED's sister company under the Global Data umbrella, based in London. Chris, over to you to give us your geopolitical and macroeconomic perspective.
Well, thank you very much, Ed. Can I first ask you if I could be heard?
You can, yes.
Well, that's a great relief. Well, you introduced me kindly at the beginning of the session as a special guest. Well, I'm a guest sitting under the same roof as MEED. I work in the Global Data Group, as you said, based in London. And my specific home is a group called TS Lombard, which is a unit within Global Data, providing macroeconomic and geopolitical research, mainly historically to an audience of asset managers. But our analysis is widely relevant, and we're very happy to help all who are interested get insights from what we do. And the geopolitical side is the part which I myself look after. And as Ed just said, I'd like to spend a few minutes trying to share some analysis and insights about how this drama, in human terms, tragic drama, in terms of economics and business, extremely serious conflict might play out. Now, Ed, you mentioned events in the last 48 hours. But in a geopolitical perspective, perhaps this most important recent event is now about 72 hours old. And that would be the remarks that President Trump made on Monday this week, 9th of March, when he said that he viewed the military operation of the US as being, quote, near complete, and would end very soon. But he said also that the US armed forces wanted to improve on their already existing victory, if I can paraphrase his remarks. And that while they are improving, of course, all the collateral effects of the conflict will not only continue, but are likely to escalate. And I would just say that every escalation is a reflection of the conflict. For example, Ed mentioned the threat from Iran to attack banks and financial institutions in the region, including the GCC. Well, this threat resulted immediately from a successful US or possibly Israeli strike on a financial institution on Tehran, which is responsible for distributing payroll to Iranian officials, especially in the security and armed forces of Iran. So it's always going to be a cycle of escalation until such time as President Trump finally decides that the operation is not only near complete, but fully complete. So I guess the question is, should we take him at his word? So he's very soon, on 1st of March, he said 4 to 5 weeks. That would take us through to the end of March. And the short answer, which our analysis arrives at, is yes. Trump will want to bring this to an end. And the main reason for that judgment has to do with domestic politics in the United States. One could say that the decision by Trump to attack Iran was a manifestation of what you might call not America first, but Israel first, as if almost Israel was part of the American homeland. America first is a famous Trump slogan which signifies a focus on the American homeland and domestic security. Now, it's clear that the energy price shock that has resulted from the conflict is shifting Trump's priorities. No longer only in Israel first, but he has to think about the economic and political effects of the oil price rising, well, almost 50% to its intraday peak last Monday, rising again now, as you've heard, and even higher price increases in gas prices. I guess that this means that the key indicator to watch for amid all the news about the conflict, most of which is confusing, and we must be honest, much of which is likely to be misleading in various ways, because information is put out by the belligerents for their own purposes. Some of it can be objectively verified, but by no means all. One thing which can be objectively verified is an angle which Colin mentioned, which is shipping. The physical fact of how many ships are passing through the Hormuz Strait can be verified. In fact, can be observed by anyone, thanks to access to various satellite services. And that, I would suggest, is the key indicator to look for. So I'm just going to spend 2 or 3 more minutes fleshing out the judgment which I've mentioned. Thanks very much. We're on to the next slide, which is the right place to be. And then I'm going to look at problems potentially on the exit or the end game path, which Trump has so clearly signaled. So on the incentives and motivation, the energy price shock, which follows the previous major conflict outbreak in the world, that was in 2022 with the Russian invasion of Ukraine, that shock led directly to the loss of the midterm elections in the US in that year by the then president, Joe Biden, and his Democratic Party. I mean, that precedent is a cautionary tale. And coming into the election year in the US, elections next November, which if the Democrats win either or especially both houses of the US Congress, which is what the elections are electing this year, then Trump's discretionary power is seriously eroded. And this will and must be a paramount concern for him, against the backdrop, as you can see on the left-hand chart here, of a sharp decline in his net approval rating. And note the bottom line on that chart on the left of the screen you're looking at. That's the red line, which has to do with inflation. It's on the subject of inflation where Trump is most unpopular. And the right-hand chart shows that same problem of inflation, or affordability, as it's labeled here, is by far and away the most important of the top 5 concerns which US voters are mentioning in responding to opinion polls. So it's imperative politically for Trump to bring energy prices down. How can that be done? By reopening supply from the Gulf of oil and gas. If you go to the next slide, I'll be very quick on here. This shows that generally on the war, public opinion in the United States is not favorable. A plurality are opposed. As you can see from the bottom right-hand chart, there's a blue bar which is circled. It shows that among the loyal Republican base, there is still support for Trump's decision to conduct this military campaign against Iran. But broadly, support is weak, and that reinforces the political analysis. So I'd like to finish by one further slide, if we can go on to that. And this is really the key thing. Trump has a track record of turning on and off. He decides to annex Greenland, and then he changes his mind. He decides to impose tariffs on China, which are a prohibitive level, and then he changes his mind. I mean, we've seen this again and again. But the difficulty with this situation is that Trump cannot switch it on and off purely at whim. Clearly, as in any conflict, all the parties have a vote, in a manner of speaking, as to how to respond. And the obstacle, which is clearly visible along the exit path which Trump has indicated, is Iran. How might it respond? It might vengefully decide to try and foil Trump's exit from the war by, if it is able to continue to threaten shipping in the Gulf and through the Strait. Because in that case, even if Trump stops the missile strikes on Iran, there would be serious obstacles to normal shipping, hence to oil and gas supply, and hence a reduction in the oil price, which is the purpose of Trump's declared exit plan. What then? Well, there's two answers to that. The first, you might say plan A, and it's already playing out, as you heard in the briefing, is for the US to continue hammering Iran with the goal of fully incapacitating Iran's military offensive capability. And that would solve the problem. However, as the experience of the war in Ukraine has indicated, and that's something which I've been following very closely in the last 4 years, the manufacture and deployment of attack drones is something that remains possible even for a country that has been very intensively attacked. And it seems at least possible, if not plausible, that Iran will continue to be able to pose some kind of threat, especially perhaps with drones, to shipping in the Gulf and through the Strait. What then? Well, I think that there is a fallback way to secure the exit. And it has to do with a version of a doctrine familiar in geopolitics known as MAD, the letters MAD in English standing for mutually assured destruction. And that's a label from the field of nuclear deterrence. But it really means here economic destruction, that both sides would lose very seriously from continued disruption of normal energy trade. And at the moment, it would appear from satellite imagery that the very few vessels that are succeeding to pass the Strait of Hormuz into the Gulf of Oman are vessels linked to Iran, most likely transporting Iranian crude oil to China, the core customer, perhaps elsewhere, but most likely China. Now, it seems impossible that the situation where Iran can export oil, but no other producers in the region can, will be allowed to continue. And there is an effective and low-risk way for the United States to address this. If Iran is not ready to reciprocate on a US ceasefire announcement, then it could be persuaded by the arrest of vessels transporting Iranian oil. We've seen this happening already as regards oil tankers shipping Venezuelan oil after Trump's intervention in Venezuela in January. This can be done. It doesn't involve massive collateral risks, such as dramatic scenarios that you may have seen mentioned in some media commentary about, for example, a US military attack on the oil export terminal of Iran on the island of Kharg. Instead, it would simply be interdicting tankers. And the deal would be lift that action in return for Iran not threatening other people's shipping. It's a clear deal to be done. It would be, as in any deal, it would be painful. The US would have to, in effect, deal with the same regime in Iran, which it had clearly indicated it would like to change. For the part of Iran, officials have vowed never to negotiate again with the US. They'd be doing just that. But the paramount interest of both sides to avoid politically fatal economic damage for the US, and in the case of Iran, existential access to oil export revenues from China. Those two motives, I think it's reasonable to suppose, would prevail. And I end there with that argument in favor of this conflict playing out in the next few weeks?
Thank you, Chris, for that very incisive analysis. I know there, just staying on that. I know there is some thoughts that even if the US were to declare and Israel were to declare a ceasefire today, that Iran would say, no thanks, we're going to continue disrupting traffic through the Straits of Hormuz. We'll continue blocking oil and gas exports just to keep the pain of an accelerator. They've got nothing left to lose, lashing out. But you don't think that's going to be very likely?
Well, I think that Iranian response is certainly likely, or at least very possible. And the argument I just set out addresses that objection or hazard, and I hope it was clear, but we can circle back on it if we'd like to explore further.
Wonderful. Okay, so we now take your questions. I can see we've already got quite a lot there, but if you do have any questions, please put them into the live chat box, and we'll do our best to get through them all and answer them. Now, we had a few questions in advance of this session through LinkedIn and email. Colin, I've got a question for you here from one of our clients. What is the long-term impact, do you think, on the Dubai hospitality market?
I think that to answer that question, I think we need to see what happens towards the end of this year. I think the way the market is at the moment, obviously travel's restricted and there's ongoing security concerns. So I think that the tourism market at the moment is extremely challenged. I think the optimistic view is that the market has an opportunity to return in the fourth quarter of this year. And I think the long-term future will depend on how that fourth quarter performs. So I think I haven't got an answer for the long term, but I think the answer to that question will present itself in the fourth quarter of this year. Okay.
And I've got a question here. Another question we received in advance was about PPP projects and the impact on the conflict on public-private partnership projects. PPP projects have become increasingly more popular over the last 2 years. I think in Saudi Arabia, almost a third of the total value of work awarded in the kingdom in 2025 was in the form of the PPP model. So increasingly important. And in my view, the impact on the PPP market, well, it's going to increase a little bit of maybe the sort of geopolitical risk premium on sort of the financing of some of these projects. But as long as most PPPs in the region are low risk in terms of the government taking sort of away the demand risk by guaranteeing the sort of supply of the demand from these projects, then I don't believe that there's going to be too much of a negative impact on the PPP market. I think, if the government is maintaining take or pay long-term off-take agreements, or whether it's water or electricity, or whether it's guaranteeing the number of students and so on in schools, or the number of patients in hospitals, I think sort of geopolitical element will not have too much of an impact on the PPP market. In fact, there might even be more of an incentive or impetus for more projects to be lived on the PPP basis if government revenues are affected further, either through a reduction in oil and gas revenues, or the focus on revenues having to be spent on other aspects such as repairs and on defence. So I don't expect there to be a particularly long-term negative impact on the PPP market.
I think the investor profiles. I think the investor profile is quite important here. I think regional investors may be looking at a situation. I think if you ask them today, now this position may change as we move on through the year, but I think at the moment a lot of regional investors would be maybe looking to manage their risk by investing outside of the region rather than inside of the region. So I think that could be a crucial factor. And then in terms of international investors, if you look at typically who invests in infrastructure, it tends to be long-term in investors, things like pension funds that tend to be quite risk averse. So I think the geopolitical question for them will be quite a difficult one to get past. So I think as things stand at the moment, I think there's some serious hurdles there for PPP, but that doesn't necessarily mean that they stay there forever.
Yeah, you're quite right there, Colin. Of course, and not just for PPP projects, right? I mean, investor attraction overall, and FDI, industrial projects or any type of industrial investment, even real estate investment as well, could well be impacted there. Although it's, I guess, as with all these discussions, it's a little bit too early to say. Colin, question here about impacts on awarded construction projects and upcoming projects in the Middle East region. We have seen some tenders being issued, and we have seen some contracts being awarded over the last week. What's your sort of short-term outlook on construction work being awarded and continuing?
Short term, I think there will be some tactical awards in terms of critical infrastructure, important projects that need to be delivered. I think there'll also be some signing of contracts that had already been tendered, with clients wanting to lock in pricing, pre-conflict pricing, which will be lower than the cost escalation that's creeping into the market now. I think longer term, there'll be some investment decisions that will inevitably be delayed. So I expect there to be some awards for now, but then in the longer term, I expect a cooling off. And if we just talk about the region in general, we were already seeing.
Question here for you. Sorry.
In terms of the region, we're already seeing.
Chris, question for you. Question for you, Chris, is what's going to, I think you already answered this to a certain extent, but what's going to stop Trump? I mean, what's the most important factor for him? Is it the oil price?
Well,
inflation?
My answer was the political and economic effects of the energy price shock. And that will shift Trump's incentive from what I labeled as Israel first, between inverted commas, to my own Trump power first, which is at stake in the midterm elections later this year in the United States. The energy shock has become the prime concern. Now, of course, in conflict situations, one can always think of scenarios, as many as one wants. It's possible that Trump will at least try to reverse the energy price shock without the war ending. And I kind of mentioned that might even be plan A, just intensify the attacks on Iran to make Iran incapable of any kinetic action that would disrupt oil and gas supply from the region. But in the likely event that that plan cannot be fully achieved, then there will have to be some agreement on releasing energy flows. And that was basically the conclusion I got to.
Right. And what about, the Gulf states, they don't seem to be able to convince Trump, do they? I mean, or even other nations?
Well, for now, no. But I think, as I mentioned on one of my slides, and thanks for the question, because this gives me an opportunity just to draw attention to this important point. Let's look at Trump's track record again. We've seen that although Israel first has been a powerful and persistent theme of his presidency. It is qualified from time to time by the interests of the United States in the Gulf region. I can think of two examples. Perhaps the main one actually was after the Israel missile strike on Qatar last September, if memory serves, targeting some Hamas operatives present in Qatar. Trump not only expressed his disapproval, but immediately afterwards he forced Israel, in effect, to sign up to his peace plan for the conflict in Gaza. Another example would simply be that at the end of the so-called 12-day war in June last year, Trump, in effect, forced Israel to stop as well. So, yeah, the interests of the Gulf states, GCC states in particular, are clearly way in American policy from time to time. And the private communication, which I think it's safe to assume will be happening between the governments of the GCC states and the United States, will be working towards another case of the US taking account of its interests in the Gulf region. So I think but that all ties in with the overarching priority to normalize global energy trade, of course, which is the core interest of all parties.
Thank you, Chris. Got a question here now, pivoting to events. Now, as we know, the Middle East or the GCC in particular, and particularly the UAE and Dubai, is a big MICE center for events, meetings, big exhibitions, and clearly, these are going to be impacting. A question here is about what's going to happen to those and the industry as a whole. Are they going to be put on hold or cancelled? And the question is, at the moment, yes, we've seen some major events, exhibitions already start to be moved. Clearly, it's very difficult to organise logistics for events and exhibitions in this kind of situation. Even if they're still not for another couple of months, you still have to start getting in the supplies for the stands and the hoardings and so on. And with this uncertainty, it makes sense to start pushing those back. So the events business, exhibitions business, which is a big part of the economy here in Dubai, is going to be affected, and we've already started to see these being put back. So again, one of those other aspects of the economy that is being affected. Colin, question here about what we think was going to happen to the GIFC and ADGM financial centres, particularly with regards to the threat yesterday by Iran on attacking American institutions and banks. Any initial thoughts on that emerging situation?
Yeah, I mean, that's obviously an initial security concern, which people will be taking into consideration. I know of offices that have elected to work remotely as a result of that statement from Iran. So yes, there's going to be an impact for now, but I think it's too early to make a call on what the long-term implications are for those financial centres. But I think it's just important to note that a lot of the attraction of those centres is regional commerce and investing in the region, and companies that are based in the region. So they're if you see economic activity returning here, then those financial centres will thrive.
Okay, and question about the desalination and energy projects being hit. So as we all know, the region is very, very dependent on desalination for its potable water supplies. There was an attack, or claimed to be an attack, on a freshwater desalination plant on Qeshm Island a couple of days ago, and the Iranians retaliated by hitting some Bahrain desalination facility. In my view, it doesn't make sense for either party, both sides, to attack desalination facilities. Not only are they potentially war crimes and against the rules of war, hitting civilian facilities like that, but both sides have got too much to lose. Iran itself is dependent on desalination on its for its southern regions, and even though northern parts of the country where most of the people live is not dependent on desalination, and they're dependent more on groundwater resources, the US and Israel can retaliate by attacking dams, reservoirs, and other freshwater sources of water. And of course, even just a few months ago, there was talk in Iran of basically relocating Tehran because of the water stress levels. And I don't think it makes sense for either party to escalate further by further attacks on desalination or water facilities in the region as a result. So I'm hopeful that will not happen. Perhaps a bigger risk is for oil contamination of the Gulf Coast. But even then, again, the desalination plants are spread wide apart. For example, in the case of the UAE, there's long been a strategy of geographically diversifying the desalination base. We have desalination facilities in Fujairah, for example, on the Arabian Sea and Gulf of Oman, and Saudi Arabia too, of course, has desalination facilities on the Red Sea coast as well. So let's hope we're hopeful that that won't come to pass. There's simply too much to lose from both sides. Okay. Questions, more questions. Keep the questions coming in, please. A question maybe for you, Chris. What do you think is going to be the long-term impact for political and economic relations between the GCC states and the US as a result of this conflict? Maybe a pivot eastwards towards China, or less dependence on the US, more dependence on the US? What are your views there?
That's a great question. Perhaps I'd have a go at answering it by recalling the video address which was released by the president of Iran, Mahmoud Pezeshkian, on Saturday last, I think, the 7th of March, in which he apologized for the Iranian attacks on the GCC countries, as you mentioned in your briefing. But then he went on to say that Iran would see such attacks if GCC countries were no longer offering their territory and airspace to assist US attacks on Iran. So this is a clear parallel with the typical approach of US adversaries, which is to try to drive wedges between the US and its allies, or at least partners or aligned countries. We've seen that with Russia and China in many forms over many years, going right back through decades of Cold War. No surprise then. But the logic, nevertheless, is there. If countries want to position as themselves as entrepot in numerous economic sectors, flows of trade, investment, then non-alignment, some kind of neutrality, is advantageous. Of course, that has to be weighed by governments against the paramount questions of national security and the value of security partnerships and alliances. These are very sensitive areas, and I think that it's pretty clear what the stakes are. But nevertheless, the strategic orientation question will not go away. All being well, if I'm right, the war itself will go away before too long. But these deeper questions have been highlighted by this dramatic and damaging episode, and they will continue to confront the governments of the regions in various ways.
Thank you. question here on, is there any alternative to get oil and gas out of the region if the Straits of Hormuz are closed? Well, I think it's important to note that Saudi Arabia's East-West pipeline, which was built about 45 years ago, does allow Saudi Arabia to export about 7 million barrels a day through the Red Sea, goes to Yanbu and then onto Ain Sokhna, the Sumed, and then onto the Mediterranean coast. So there is Saudi Arabia has long obviously had a strategic scenario planning for events just like this, and has an alternative export route for some, but definitely no means all of its oil. And likewise, the UAE over the last 10 years built up its pipeline, export pipeline to Fujairah, and it's able to export about 1.8 million barrels a day through Fujairah. So there are some limited export options for crude anyway by Saudi and the UAE, but of course not by no means all of their production. And for Qatar and Kuwait and Iraq, there are no alternatives. So for most of the countries, they're stuck right now with their production. And for Saudi and UAE, there is some limited outlet. So no, we're very much at an impasse, I think, in this situation. There's no short-term solution to this, as it would take a long time for alternative export outlets to be built. Colin, a question about contractors on oil and gas projects, but contractors in general. What's the impact on the construction or contracting market, do you think?
At the moment, as I said earlier, there's been some sites due to specific security threats or concerns, or reviewing procedures where they have, I think the word to use would be paused work. In terms of impact at the moment, sites are still working. I mean, I've been around quite a bit of Dubai over the past few days, and sites are still operating, and you particularly see it at shift change time. There's as workforces are leaving the site and night shifts are turning up or day shifts are turning up. So yeah, you do see sites operating at the moment. Like I said, there's that cloud of uncertainty which is hanging in terms of what's happening with the supply chain and cost escalation. I've heard some things, some areas of stress being talked about by people already, saying that they are having some impacts. That seems to be on specialist items that are being shipped in rather than basic commodities. That said, I think that supply chain risk is going to be there for a while, but it's a story we've dealt with quite a few times over the past 5-6 years, either it be during COVID, Ever Given, or attacks on shipping in the Red Sea. So it's a story we've become a little bit familiar with over the past few years.
Thank you, Colin. Okay, so well, we're pretty much run out of time. Lots and lots of questions. I can see more than 500 of you joined us live, and I believe many more of you will be watching this once it's been uploaded to YouTube. So thank you very much for joining us today and attending, and for your questions. I hope you found it interesting and insightful and valuable. This is the second in a series of these live briefings we're doing on the conflict. We'll be doing more next week. So do subscribe to the MEED channel on YouTube and onto our LinkedIn page and a thread on the conflict in order to get the notice, an advance notice of our next live briefings, and also just to engage with us and to ask us questions. And if you like the content that you see today on the MEED YouTube channel, you'll see many other videos we've recorded over the years on different aspects of the GCC Middle East, whether it's power and water projects market, the railway sector in the region, giga projects program in Saudi Arabia. If you take the time, there's lots and lots of different videos recorded there where you can get lots more information and data on various different economic and project aspects of the region. But for now, thank you very much to Colin Foreman, the MEED editor, Christopher Granville, MD, and geopolitical and macroeconomic expert at TS Lombard, MEED sister company under the Global Data umbrella. Thank you very much for your contribution today, guys, and giving us your thoughts and opinions and answering questions. And from me and for all the MEED team and Global Data team, thank you very much for attending today, and we'll speak to you all again